All right, what's good? What's good? What's good? What's good? Welcome, welcome, welcome. Hope everybody's doing great. Let me send out these last couple messages, make sure everybody's on here. All right, cool. Cool, cool, cool. Well, hope everybody's having a great Sunday so far. Depends where you're tuning in from right now. It might be actually pretty late for you. It's 6 o'clock here in Miami. And yeah, man, we are in the final stretch of the year. Especially this is basically the last real like week and change that we have left of trading for me. Don't really expect to do much the last week of the year. Um, so yeah, we're gonna see what we can take advantage of to end the year on a good note here. But um, yeah, that's it, man. We're basically done with 2025. So as far as trading goes, obviously now Um, heading into the new year, we're gonna have a lot of cool new things that we'll do as far as goal setting, recapping the year, and just kind of getting prepped for again a fresh start. So excited for that. Definitely gonna start prepping some content for that. But yeah, still operating as normal, taking advantage of another week that we got left, basically. So let's get straight into it, man. As far as news goes, I see you guys in the chat. What's up? Hope you guys are doing great. Um, yeah, as far as news goes, this week we have some high impact stuff on Tuesday and Thursday. Tuesday and Thursday. So Monday, Wednesday, Friday, nothing really too crazy. And then again next week, um, 20 basically Monday and Tuesday are like maybe the last real solid days. Um, Yeah, we'll see, man. I don't know. I mean, I'm not saying I won't trade days like the 29th or the 30th, but I don't expect much from the market, honestly. Um, yeah, I'd rather just kind of like really review and prep and even step away from the charts for a little bit that last week just to kind of like create that ritual of like separating time of trading and not trading and just kind of refreshing yourself and getting very clear on not just kind of like going through the motions again starting January 1st, but to actually purposefully use that time, which you should really do like in a way every week, every month, every quarter, and then every year. But especially a year, that's like big milestone for us to number one be alive to even chase this dream. Um, but again, it's just a good mental reset time to be like, all right, cool. Like, what did we do these last 4 quarters of 2025? What did we learn? What did we change? What do we need to change? How can we keep getting better, etc. So that time of reflection and planning is coming very, very soon. But yeah, let's kind of just look at where we're at though for the market right now. Nasdaq had a pretty strong sell-off to end the week on Friday. As far as the model that I've been like showing and trading for a while now, we did have all the confirmations for sells. The only thing we didn't get was price giving us that little push to the upside before crossing back down to catch that sell. So unfortunately, I didn't really take any big position at all here because, yeah, I just didn't have that final confirmation of price creating that wick to the upside for us to then see it cross back and drop. So yeah, it was kind of sad because price literally at 10 a.m. just opened, crashed, and never looked back. So shorts were definitely the bias to end the week, and it did play out. We just didn't really get the criteria for what we usually see with the model, which is a manipulation to the upside before crossing back down and selling off. So that was the only thing that kind of sucked. But all in all, it was a whatever week. Honestly, December in general so far has been kind of like as far as trading the model goes, like not really that crazy. Um, but yeah, I mean, you know, in general, December is not really the hottest month compared to others, and you know, there's still some time left. But for the most part, I thought if we were gonna make, you know, December a really really good month, it would have had to be really like the first couple weeks of the year, because I mean of the month, because once we start getting towards like the 24th and on, and it's gonna be hard to try to do that. But yeah, I think I'll just showcase real quick, like from Monday to Friday. So Monday, we started off. What was this? Friday. Here we go. Okay, so this is where last week started, basically. So Monday, 10 a.m. I believe Monday was the good day. Monday was like the best day of the week. Right here. So for those that don't know yet, or haven't done it yet, I trade a very specific like strategy or model at 10 a.m. Eastern time during New York session, where we have a couple different confirmations that I look for, you know, jumping into trades. The confirmations are these right here. I do teach it in Akashex. If you are an Akashex member, then you kind of probably already know. If you're not part of Akashex, then this is, you know, what we go over for all the students to have a very specific strategy. So yeah, basically every single day I'll look for these exact things. 6 a.m. candle, is it bullish or is it bearish? Depending on what candle we get, it kind of dictates what direction I'm looking to take things. We saw that we had a bearish 6 a.m. candle, which means I'm focused on selling during the 10 a.m. to 2 p.m. window. So that is the first thing. The second thing is looking at where we're at in relation to the Asian range. We can see that we have Asia high and we have Asia low here. Now, for me, if we're bearish, I want to see price fake above Asia high and or break below Asia low. So in this case, when we open up at 10 a.m. around here, the closest thing we have is Asia high, and we saw that price indeed did fake above it. At market open, we saw this rally above. Okay, so we see that manipulation of price above Asia and London. Okay, and then price comes crashing down. So for me, if we have a manipulation of the high, that is a bearish, like that's a bearish concept, is faking higher to go lower. So we fake high, we close lower. That checks out as a confirmation for me. Then we look at the VWAP, this little line right here. Looks like an EMA, volume weighted average price. If you know that serves as like a resistance, if price is under that, then that's a good confirmation. And then lastly, we want to see price open up at 10 a.m., spike up, and then cross back down. And so if we drop this down, we see that the 10 a.m. candle opens right here. Okay. And we see that at 10 a.m., because this is the 10 a.m. candle right here. Right, this candle right here is our 10 a.m. candle. We see price pop up above the price and then start coming back below. So that's what I want to see. If I drop it down to even smaller time frames, you get a better idea. Price rallies higher, right? And then starts to cross back below. And so yeah, in that situation, we look for shorts at that 10 a.m. price. In this day, I think if we remember, I was talking about how I usually use 50-point stops unless price shows me that we can afford to use something smaller. In this case, a 30-point stop basically covers all of the highs that we saw over here. Okay, so 30 points is enough on a day like that. And again, 10 a.m. price opens up here. We see price rally up against our direction and then start closing back below the 10 a.m. open price. So that is the final like entry criteria that we need. And I usually try to target, somewhere like a 2-to-1 risk to reward ratio or more, depending on what the market is willing to give. But, as a baseline, I do try to secure at least 2-to-1s. And yeah, so Monday, we get this idea right here. We see we cross over a 2R on that setup. Okay, so that was definitely like the really good day for sure. You can see how price again continued to run really nice on Monday. So Monday is literally what we're looking for. All right. So it's really about being patient on the days where price doesn't do what you want it to do. Like that's really where the magic's at, because in reality, like, people are gonna get sometimes very impatient or frustrated if the market is not doing what it, like what you want it to do. But every strategy has situations or days where it does what you want it to do, and other days it doesn't, and that's for any strategy. So like one day one strategy is gonna eat, the next day another strategy is gonna eat, and so you can try to have multiple strategies and multiple ways to do things, but I think like that's easier said than done, to just jump from idea to idea. At the end of the day, you don't know what the day is gonna bring. You know what I mean? So the only thing you can really control is your approach, your risk management, and where you put your stops. Everything else is not really in your hands. So you can be like really picky on certain days if it's not lining up to what you want to see, and you're gonna have to have many days where you sit out or you jump into positions where you have to go break even. Price doesn't necessarily run for a 2-to-1 plus trade, and maybe it runs to like a 1R and reverses. Those are going to be break even days, no trade days, etc. But all in all, the whole point is to continue doing something until you can hit on those good days. So everything really made sense though this day specifically, where we see the intention of price. You have price above Asia high and London high kind of manipulate at 9:30. We see price come crashing down. 10 a.m. rolls around. We have all of our confirmations lined up for a bearish setup. We execute the bearish setup, and we can even see like we had the liquidity from Asia low intact here as a really good first target. And yeah, it ran for way over a 2R. So Monday is really what we're looking for. So that set the tone for the week for sure, was Monday. And then the rest of the week, we can kind of fast forward through it, but there wasn't really anything else that exciting the rest of the week. I think Tuesday, where's Tuesday? This is Monday. Tuesday. Yeah, so Tuesday, we had a bearish 4-hour candle from 6 to 10, which means that our bias that day is to be focused on sells with the specific model. And I know this day I ended up actually calling buys, so I didn't trade the model specifically that day, and it worked out. So I'll show that trade real quick again, but I still want to talk about the model in general though. So 10 a.m. open price was here. Okay. And so again, if we look at the confirmations, you have a bearish 6 a.m. candle, which means you should be looking for sells. Price in relation to Asia, we saw that Asia's low point was down here. Okay. So, the high was something that the liquidity was still intact there. There was still money sitting up there from that. We still had the liquidity from London high as well sitting there. So we had not reached the highs that day. All that money was still parked there. So yeah, we're looking at Asia low. If price stays below Asia low, then that is a bearish confirmation. And then the VWAP also has to stay above price. And then we look for price to fake out above and then come back below. So on this specific day, you could argue, for example, that, what's it called? and go to 1 minute. That at 10 a.m. price basically rallies up, comes back down, and starts to like look like it's gonna break below 10 a.m. right? But for me, and like this is where experience and intuition can help you. Sometimes it can make me overthink a setup and cause me to miss a trade. That's also the flip side of it if you're too picky. But luckily I was picky on this day because, you know, again, I could have gone for sells once we started seeing price come back down here, but I just saw the fact that we took out like the London low here and price started like shifting market structure on the 1 minute. Like we were basically like, after we took out this London low, saw a really steep recovery and shift of structure above price. We failed to make new lows below here. Price kept making new highs above this high. So like everything was just showing me like bullish momentum in that moment. And that kind of got me like, nah, I don't like the sells anymore because of that. And so I've ended up going for a reversal model that's kind of like what I was teaching before. Before I started teaching this specific model, I was just looking at like Asia high, Asia low, and looking at breakouts and fakeouts from that level. So on the live session, I actually ended up calling out this buy, where basically, you know, when it comes to like Asia or even London, you know, it can go for both, but I've always taught it with Asia. That's a key, like it's a significant level, right? Like session-based liquidity levels are super important. Like, where's the high of Asia? Where's the low of Asia? Where's the high of London? Where's the low of London? Those 4 points of price are going to be very sensitive. Every time you hit the high of London or the low of London or the high of Asia or the low of Asia, you're going to see price only do two things. It's either going to break and respect that level and keep going outside of it, or it's going to fake out, like pushing above or below that level and then turning back around back into the range. You know, it can only do those two things. So a good example of like a fake out is literally what happened with London low. So this is the low of London that you can see from like this big square. This is all London. And you can see very intentionally how price takes that low and it recovers and shifts structure back above and into that London range. So that's a clear sign for me of manipulation to the downside. So if I see manipulation outside of this and then shifting the other way, right, for me to want to sell against that here, that's just sketchy for me. Like seeing a manipulation of a very sensitive area and then going the other way, it's like I'm fighting this big move that I see trying to play out here. And sometimes it could do it, like my setup could play out and I miss it, you know, but I just didn't like that, so I didn't take the sells there. And then my thought process was, okay, well, if we came back into the range of London and now we don't push below 10 a.m. and we start to cross back into Asia's range, so this is Asia's range right here, then I can use the untapped liquidity of the upside, which is the London high and the Asia high, as like my targets, right, of like where I can expect price to get to, and take a trade based on that idea. So that's what I did. We looked for basically buys here, 50 point stop, or 30, it was 30, sorry, 30. And we actually ended up getting really close to stop on that trade, but the 2-to-1, whoops, the 2-to-1 trade was basically pushing between London high and Asia high. So Asia high is like this point right here, and then we had London high right here. So basically I'm trying to take price to take out these two levels right there, the two major session liquidity areas, the highs of Asia and London. And so yeah, price starts to cross. As you can see, this is what I was saying, where we got really close to stop on that big pullback there, but nonetheless, you know, it ended up maintaining, and then price starts to rally higher. And eventually it ends up hitting London high and then Asia high right there. And so that was it. So that was Tuesday. So Tuesday was pretty good. Okay. And then definitely the rest of the week was whatever. So again, as far as like the actual model though, that was technically a no trade day. Okay, so I want to re-emphasize that. I called a audible here, which means I switched up the play for those who don't watch football. I switched up the play on this day because I feel like I kind of, when you get to know your strategy, you start to see like, okay, it seems like we're not gonna get our setup working. As far as sells, like I don't like the sells, and that's what the strategy calls for. So all I could do at that point is either not trade it or go for buys, but I need to have many other confirmations if I'm gonna go against the direction of my other model. Like I need to be very convinced that I have a good reason to go against my model on that day. And yeah, it worked out for this specific day, and that was Tuesday. If we go to Wednesday, and now make this part as fast as possible here. I think was Wednesday FOMC, right? It was FOMC. Wait, what? Oh, here we go. Yeah. So at Wednesday the 14th was FOMC. So that day was kind of like one of those days where I'm like, oh, I don't know, like what the market's gonna do this day, and it's FOMC, so let's see. 10 a.m. was here, and again, this day, we had a bearish 6 a.m. candle. What? Okay, we had a bearish 6 a.m. candle again, right here. Oops. Okay, so that's bearish confirmations. Very similarly to Tuesday, we saw London low right here. We kind of like took that low a couple times and started pushing away from it. So that was kind of sketchy there, how price, was manipulating the downside. So that was definitely a factor there. But we were technically below Asia, so Asia's low is right here. Okay. VWAP was still above price. Okay, then you need price to pop up, pop up above price and then start to come back below. And on this day, I ended up hesitating. I think on that session, I ended up hesitating. Yeah, I ended up hesitating on this trade. I just saw like how the day before we rejected London's low and started shifting back above. And I felt like on this day, I started seeing something like this panning out. Like something like this where we come back above. And so that kind of psyched me out. But as far as like putting that to the side, as far as the confirmations of the strategy though, everything was bearish. You had 6 a.m. bearish. We were under Asia, under the VWAP. So you let price pop up against 10 a.m. price, close back below, and then you have sells. Right? So, the stuff was there for sure to take a trade. 30-point stop was also enough on these days where like volatility has been a little bit less aggressive as far as like needing a bigger stop. We didn't necessarily need 50 points. We have all these highs covered. We have Asia covered. We have everything covered here. With a 30-point stop. So yeah, this was the setup. And then yeah, price ends up smacking over 2 to 1. So yeah, that was on me that day for sure, for just like not taking it. But again, just seeing like price, pop up above, like I don't know. I just got psyched out. I looked at what happened the previous day with London getting taken and then seeing a big reversal after that. I kind of like, I guess, stayed with that in my head. And that's the funny thing. Like, when I tell you, if you have a strategy and then you do other things, it just plants a seed of not necessarily doubt, but when you have a certain process, like you just follow the process and don't think about it, and then you let the long term numbers play out. Like that's the whole point of a strategy, is to be able to like have a consistent execution approach. And if you do the execution properly over time, if the system truly has like an edge, you'll be in profit. And sometimes, again, like me, I imposed my like thoughts and will into the market, and it worked out the day before. Like, I didn't like the setup, I didn't take the setup, I took the opposite, it worked. But look how funny, and it's a teaching lesson that I talk about, and it actually manifested in real life too in front of everybody the next day, was because I got away with going against my model the day before and winning. Then when I overthought my model again the next day, I missed out on a win. Now in reality, it kind of washed out because I had a 2R trade the day before that I should have never caught, and then today I should have caught a 2R trade and I didn't. So it kind of like balanced out. But it's just funny to show you, like, I could have had a no trade day or whatever the day before and then caught this one, or I could have won the day before and then missed out on this one for like changing my ideas. So I hope you get what I'm saying. But like, when you have an execution style, you remove the doubt. Like, if you see it, you take it, period. But when you start trying to like filter out, like, oh yeah, I have my model, I have my strategy, but I don't like it, so I'm not gonna take it. You gotta be careful with how you use your like your discretion, and you gotta track that as well. Because if I use my discretion against my strategy and it costs me, you need to document that and realize, like, damn, you're getting in the way of your own success because you have a strategy, you have a method, and then you like didn't like it for whatever reason, and then you miss out on trades. That's not good. So I feel like, again, my discretion helped me the day before, and then my discretion the next day kind of cost me. And so it's in the middle, which is okay. As long as you're still like catching trades and like doing okay, then you're good. But you have to just do that yourselves, right? Like, start paying attention to whether you actually have a model you follow or not, whether you follow it sometimes yes, sometimes no, and just see how that's going for you. And sometimes you're going to realize, like, okay, I need to be more systematic with my executions, and other times maybe you're like really systematic and you're not putting maybe enough thought into it, and then you're like taking a whole bunch of L's, and maybe that's where you need to use a little bit more discretion or be a little bit more picky. It really just depends, man. Like, some of you guys are trading this exact model I'm teaching you, some of you are not. And I don't expect everybody to necessarily trade the model. Like, I don't make people do that. It's silly. I just want to teach you guys stuff that makes sense to me, that I think are some universal principles in trading, period, that you can take into your own strategy that still helps you as far as like risk management or the way you look at session-based liquidity or whatever it is that you take away from me. But yeah, I just think the thinking process of building systems, following systems, and probabilistic thinking, and these little nuances of like, oh, what happens when you follow your strategy or you don't, like, that's the stuff you're seeing right now kind of unfold. So all that is like a fancy way of just saying, like, if I stick to my strategy, you're gonna have wins, you're gonna have losses, break evens, but it's easier to like always know what you're looking for and just do it over and over and over, and trust that over the next week, 2 weeks, month, 2 months, it's a good strategy, then it does the work for you. If we put too much of our thought into it, we could end up self-sabotaging the strategy. Or sometimes it just depends like how good your discretion might be. I feel like that's where you can talk about things like being blessed or being lucky, whatever you want to call it, when you do use your discretion, and these are things to track. I truly do believe that there are some people that are just more likely to be successful in certain areas more than other people, no matter how hard they work. There's some people that are just really good at sports. Some people are not. but if you work really hard at it, you can kind of keep up, you know. Same thing with trading. Like there's just some people that see this stuff, or like the way that they look at risk allows them to just jump in aggressively and they make money. Other people are very, very smart and they just can't crack it, you know. And so you got to get to know yourself and what you do well, what you don't do so well, and yeah, just track that information and make adjustments. But that was Wednesday before FOMC. That was technically a good trade following the model. I did hesitate that day because of the actions I took the previous day, but all in all, I mean, those two trades kind of washed out anyways, so no big deal. Which by the way, later on FOMC, you can see how like price, you know, skyrocketed, came back down. So that's definitely very, very FOMC-ish to do all that after. Thursday, yeah, Thursday's 10 a.m. price I think was right here. Oh yeah, it was like all the way down here. I remember now. So 10 a.m. open price was all the way down here, and price never got back down to there. And obviously that was like a day where it was calling for bearish price action. Got a bearish candle. So yeah, there was not a trade at all on Thursday, so that's pretty easy. You can see that we popped up above 10 a.m. and we never came back down the rest of the day. Like literally we just like popped up and then left the whole day. So no trade day Thursday. And then Friday, like I said, Friday, all the confirmations were for sells, but as you can see right at 10 a.m., we never ever got a pop up above price. Okay. So at 10 a.m. on the dot, you just see price opens up and just dumps off immediately and then just continues to run. So that was a little frustrating. Obviously, if we would have gotten anything like a pop up above and then a cross, we would have definitely looked to taking that and we would have cashed out. But we didn't get a pop above. Now, it's really easy in hindsight to just be like, oh, once 10 a.m. hits, like just jump in. But as you guys can see on many other days, the more likely thing to happen is that price will manipulate against your position. And that's why I, do it the way I do it. I expect and I need price to manipulate above to create that wick on the 4 hour for me to then jump in back at the open price when price starts to cross back. But if we don't get that, there's no trade. And so unfortunately, even though our direction's right and everything makes sense, we don't get that final thing, which is like allowing price to go against us first and then jump in. So there was no trade on Friday either. So basically Thursday, no trade. Friday, no trade. Wednesday, there was a good 2-to-1. Tuesday, there was no trade. Again, I'm kind of doing it backwards because we won this trade and we didn't take this one. But as far as like the model itself, I'm just showing you the model. Again, Tuesday, so Monday was good. Tuesday, no. Wednesday was good. And then Thursday and Friday, no trade. So 2 out of the 5 days is really where there was a trade. The other 3 days, not so much. And each trade doing over 2R means you have a 4R week. And yeah, 4R, depending how much you risk. If you risk 1%, that's 4%, meaning that you're pacing 16% for the month if you just go off of that 1 week, of course. But dude, 4%, look, even 4% in a whole month is very powerful. Like a whole month, like 2R trades at the right risk and at the right capital that you have makes a big difference. I say this all the time. If you have even one firm, right, like Alpha, or I don't know, whatever firm you want to put, like let's just not even put a name to it. One firm, and you have 3 accounts, right? Some firms let you have 3, some let you have 5, some let you have 20 if you're on Apex. Like it just depends what firms you guys go with and whatnot. But 3 firms, or let's say one firm, 3 accounts, and you got 350K accounts, right? A 1% risk, I mean, I wouldn't risk $500 on that account because remember, you have usually like a drawdown of like $2,000, right? So in reality, like, you know, you kind of don't want to go so aggressively on your actual funded accounts unless you're just trying to go really hard with those specific accounts. But if we're just talking in general, I think anywhere from like, you know, a $200 to $300 risk per trade is okay. Like if you risk 200, that's like risking, you know, 1/10 of your allowed drawdown, right? Which means it's like the same thing as risking 1% when you have a 10% drawdown, for example. So if you risk, like, let's say 200, right, dollars, which is like technically, you know, 10% of your drawdown, right? I think that's a decent spot, right? 200, that means that when you have your 4R trades, 2R trade is a plus $400. Okay, and we had 2 of them, so we had one on Monday and one on Tuesday, times 2, right, is $800. Okay, and you have $800 by 3 different accounts on that firm, right? You're looking at a $2,400 week. Excuse me. So again, some people, you know, here, if you're like trying to buy a Lamborghini and all that stuff, of course this is not like that crazy. But you know, something like this where you only took 2 trades a week, you had just 2R trades, you have 3 accounts, this is a $2,400 week. Obviously, where you start to realize like very powerful stuff is, you know, you can have more than 3 accounts at some point. You know, there's trade copiers, there's different firms that have more accounts, etc. You know, but when you start looking at this like longer term, when you get more consistent and all this stuff, if you look at something like this same thought process, right, and you times this by 20 accounts now, because like if you go on Apex and you do something like this, right, excuse me. So this was 2, right? 2 days. Okay. So $200 risk, 2R trade, $400. Times 2 is 800, right? This is in 1 week, and you're talking about, right, from 2R trades risking 200 on your 50K accounts. You do that by 20 accounts with Apex, for example. Okay, how much money is that now? $16,000. So again, this is for you to realize your options, realize what's possible, but the solution is not necessarily like, oh, I need to catch 5 2R trades a week, or I need to catch like, you know, I don't know, like if you're gonna have a higher risk to reward system, because I know I've had times where like I had a higher risk to reward strategy where I would do like 4Rs, 5Rs, sometimes 6Rs, whatever, and the risk had to be smaller though, because I wouldn't win as much, or I wouldn't trade with the same amount of risk, because it's taking more setups usually to do that. You know, there's always a trade-off. If you're gonna have usually a high risk to reward system, usually that means that you're gonna take more losses, or you just have to use risk like a smaller amount. And if you have like less trades that you take with less risk to reward, then you can usually afford to take more risk on those trades, because you're not taking so many trades, let's say a week or a month, right? So there's always a trade-off between like how much you risk, how much your account size is, how many trades you take, what's your average risk to reward. You know what I mean? So I don't know. For me, I personally like to be able to trade for a small window of the day, find a 2R trade, be in, be out, and some days that means it will be a no trade day. Cool. I don't know, like that's just a personality thing. Some people love to be scalping and taking 3-4 trades a day. I don't care. As long as you guys know what you're doing as far as position sizing and doing it with intention. Not just taking three to five trades a day because you feel the itch to trade. Nah, do it because you have a system that calls for entries and you're just executing the entries that your system calls for and you've done the numbers on that system, then cool. Like I respect that. But yeah, this is just to have people understand that you can literally, out of 7 days in a week, so 2 weekend days and then 5 trading days, right? So 7 days in a week, obviously, and then you have 5 trading days. And out of those 5 trading days, there was really only 2 days that we, had our strategy line up. But even with those 2 days only, if you have enough accounts, if you have enough risk on those very selective setups, you can still touch this type of money at some point. Again, this is showing you like the upside with 20 accounts with Apex. And then I showed you like other, I guess, not necessarily more realistic, but more so where you would start is like 350K accounts, and making like 2,400 in a week. Trust me, this is what I used to make a whole month working at a bank full time. Maybe a little bit more than that. But when I was starting working at a bank, back in like 2016, 17, I used to make like a little bit less than, like a little bit more than half of that every 2 weeks. Like this was basically almost a month. Maybe I'll make like 3K a month, right? So 2,400 in a week, like this is great, Like if you do that pacing wise, like let's say you don't even have that every week, but you do like 2,400 on a really good week. Maybe you have like 1,000 a different week. Like you can make a good like 5Gs a month doing that, right? Now, what you do with those 5Gs is going to be really important because with those 5Gs, you can put things into like stocks or cryptos. Obviously, like if you're in a Akashex, we have affiliate marketing. You guys can build communities, make residual income off of promoting the communities. There's a lot of different streams of income when it comes to like trading. So it's just making it work, But I think this is something that, again, this is what last week produced. Like I showed you the setups, I showed you, the strategy, how it played out. It's just not easy to not trade Wednesday, Thursday, Friday, And the reality is sometimes life gets in the way and you might not be able to trade on Monday because you have other things going on and then you missed the good day that the actual setup happened. You get what I'm saying? So like that's the thing, if you're not going to take a bunch of trades, you do need to try to take advantage of the days of the week where the setups do happen, because then if not, you're probably going to have like nothing happen the whole week for you. So for anybody that like wants to become a full-time trader or like wants to make full-time money, that's going to be different based off your like finances and your bills and all that stuff, but you gotta work your way up to that point 100%. Especially if this is like your only income, you definitely need to like create some padding for yourself. You need to really have the math down, your psychology down. Like it's a process. And I would say like you definitely need to have more than just 3 accounts. You definitely need to have more than just one firm. And yeah, you're gonna have sometimes red weeks and even a red month. You could lose your accounts, have to do evals again from scratch sometimes. Like all those are definitely things you're gonna have to do. So yeah, did a lot of rambling. I haven't even checked the chat, so let me see. Oh no, don't tell me you can't hear me. No. No way. There's no way. I've been talking. Oh man. I see the mic working on OBS, so I really pray that you guys were able to hear me. You can? Okay. Oh man, I was about to say, I can't believe I just did all that yapping for like the last 45 minutes for no reason. Oh my god, that would have been crazy. So yeah, not sure if you guys have any specific questions that maybe you guys want me to go over. But yeah, that convo I just did right there was very important for you guys to kind of have good expectations of, how you need to get your accounts set up, the risk, the amount of trades you're taking a week, all that stuff. So to give you a good idea of, what it takes. Okay. So yeah, any last, hold on. Are we seeing a question here? Yeah, I mean, definitely Nas is bearish in general right now, for sure. Higher time frame wise, it's tricky. There's a couple sensitive areas that I think we need to pay attention to with price, because like if we look at the daily, we have like this daily inefficiency here, and then we have another one down here as well. So these are potential like inefficiency targets that price may want to like work its way back to if it's gonna keep going down. But even like, again, this drop off from Friday, we saw that was also inefficient. Like it had like a flat top. So I don't know. I think in general, price may like drop off a little bit. I don't know how far. I mean, it's hard to say right now, but I think in general, I'm still overall bullish on Nasdaq to take all-time highs heading into the new year. But I don't know. We need some more information. So like short term, yes, bearish a little bit more, but overall, I think we're gonna end up breaking above here again at some point. So we'll see. Again, we have to let Asia play out, London session play out, and see what we get from there. But the first major inefficiency definitely is this one right here. This was from Tuesday. Yeah, it's from Tuesday. So I'll leave that one marked and see how we react off of that. But definitely think that there's reason for us to break all-time highs later once we get some type of shift down here. Still too early to call though. We'll see. Definitely need to see how London and Asia play out. All right, cool. Well, yeah, guys, I look forward to seeing what's up with the markets this week. I hope you guys have an amazing rest of your Sunday. Tomorrow I will be live on Akashics in Spanish at 11 a.m. Eastern. And then Tuesday, Wednesday, Thursdays, 10 a.m. Eastern on Akashics English. And we'll see what's up. We'll see how many trades we can get this week before, we run out of good days here. But yeah, hope you guys got some insight, some value tonight. I will see you guys soon. Yeah, let's make the most out of this. Make the most out of it this week, and I will talk to you guys there. If you have any questions, you guys can message me.